The UAE is far ahead of other Gulf countries in terms of economic diversification. 10 years ago, the country set out to lift GDP contribution from non-oil sectors to 64% by 2030. That figure surpassed 60% already last year, and the government wants to keep the momentum going. It aims to raise it to 80% by 2021. But it hasn't been able to shake off its dependence on oil just yet. Economic growth in the UAE has taken a hit from falling oil prices. It slowed to 3% in 2016. But with accelerated efforts to find new forms of income, the government is expecting a rebound this year to 3.9%. The introduction of a value-added tax at the beginning of this year is expected to boost those efforts. Sustainable development is also a key part of its economic plans. The UAE wants to stay at the forefront of generating renewable energy in the Gulf, even while a traditional energy source is experiencing a rebound. Oil prices hit $70 a barrel on Thursday, a level not seen since December 2014. Prices have risen around 15% since OPEC and its allies agreed to extend an output cut. An oil recovery may be good news for UAE's economy, but it wants to brace itself for challenges in the market. US shale production, which has been adding to an oil glut, won't be slowing down anytime soon. Instead, more oil rigs are being added by the month. President Donald Trump's plans to allow drilling and oil exploration up and down the US coasts threatens to reverse OPEC's efforts to curb oil production. As a result, the commodity long known as black gold is unlikely to return to its glittering glory days. Laila Humairah, TRT World.
And Nawied Jabarkhyl spoke to the UAE's Energy Minister, Suhail al-Mazrouei. It was one of his first interviews as the new president of the oil producers cartel, OPEC. Mazrouei says he's pretty happy about where oil prices are at the moment.
The market have cycles, and we are at a high demand cycle, and we are monitoring in OPEC. We are monitoring the market. We were, when we made the deal for 1 year, continuing the deal for 1 year, we were in the range of $60, and we're still at the range on average of $60 plus.
So what is the cutoff point then? What's the point at which OPEC says prices are rising too much and this is going to affect supply?
One fundamental area that we look at is the over the 5 years average, and we've been talking about this. We still have more than 100 million, or about above the 5 years average, and we need to remove that if we believe that we need to be at the 5 years average. Demand for 2017 has surprised us positively versus the numbers that we put. This year is going to be another good year in terms of demand, another good year in terms of economic growth.
I wanted to talk about demand in China in particular. Most analysts view China and India as pivotal to where prices will go this year. How important do you see China's role for oil markets in 2018? China
is a conventional market for us, and everyone is watching China, everyone is watching India. Those are very important markets for us, and also for the world, the overall world demand. No doubt, China is a critical country in terms of its economy, in terms of its demand on yearly demand growth on crude, and we are watching China very carefully.
And just lastly, you've assumed the responsibility of OPEC this year. What's the focus for you personally and for OPEC going forward, especially given tensions between key players like Saudi Arabia and Iran?
I think we have the focus for me and for OPEC this year is the compliance. We have signed for a 1 year continuation. We are monitoring and expecting that the compliance level to the agreement is going to be achieved, and we are targeting at least 100% level to achieve a compliance level that will help the market recovery, that will help the overall target of making the investments in this, or attracting adequate investments into this industry.